The voluntary carbon markets have developed significantly over the last 12 months. Exchange trading and daily assessed pricing are now the norm, allowing companies, banks and developers to trade and invest with more certainty. S&P Global Commodity Insights creates these assessments, believing transparency is the key to the market achieving its full potential.
In contrast to the highly regulated compliance carbon market, the voluntary market operates on independent governance programs and standards that have been coordinated by the United Nations and other organizations.
S&P Global Commodity Insights is playing a key role in creating a transparent pricing structure for global carbon markets.
In a voluntary market, you have different projects that have different methodologies, that all have different attributes associated with them, and that all has an impact on price. And that's where benchmarking becomes really important, because it's very difficult to kind of pull all of those disparate elements together into one price and have that be universally recognized, which is sort of that hole that Commodity Insights fills with our own price benchmarks. Price benchmarks are very important to overall commodities trading because they provide very key definitions and they allow people to write things into contracts. They allow people to hedge positions. They create definitions in spaces where there is a large variability in terms of what things represent. And so as a result of that, they can be very important in order to build out that necessary stability in order to grow a market effectively.
Commodity Insights recently joined forces with Expansive, a leading infrastructure provider and exchange operator for environmental commodity markets. Together they make up the ecosystem in which the market will have access to transparent benchmarks, using the trading information from the Expansive CBL exchange, which is then incorporated into Commodity Insights daily price assessments.
If you want to know what the price is for the leading benchmark contracts in the carbon market today, you come to the Expansive trading platform, and you will see that. Then that information then feeds into the Commodities Insights benchmarks. So market participants who then write long-term bilateral offtake agreements referencing the Commodities Insight benchmarks will have an exposure back to the spot prices that we have.
Daily benchmarks allow for trading further ahead, creating a better quality market that's encouraging further investments in projects on Paris goals. The result is that the emissions market is growing quickly, partly due to these benchmarks. But Commodity Insights emphasize that they don't set the price, they reflect it.
The way that we do that is we go out and speak to market participants. So on the buy side, on the sell side, everywhere in between, we look at the exchanges that are currently publishing information as well. And all of that will factor into the assessment process each day.
It's remarkable how much has happened over the past 2 years. Just the establishment of the benchmarks, the liquid, transparent electronic marketplaces like the ones we operate, and then the benchmarks like the Commodities Insights team provide. All of that has resulted in a significant growth in terms of volumes. Market volumes have more than tripled over the past couple of years. We're now seeing a market that at the notional value is several $1 billion worth of finance.
Markets are also picking up across Asia.
There are trading desks which are being set up all over Asia. Singapore, Indonesia are emerging as major hubs for that. There are major exchanges which are being set up as well, especially in Singapore, and there's a lot of investment by Asian firms into the carbon market. We have, in fact, a lot of market players globally, including in Asia, constantly reaching out to us at S&P Global Commodity Insights, wanting to understand our pricing information, wanting to understand how we put up prices every day, the market intelligence that we get. They're reaching out to us in an almost panicked pace because they do understand that this market is here to stay and it's going to grow.
We have onboarded so far this year over 150, close to 200 market participants, and we're going to onboard, another couple of hundred probably before year end. And these are companies that have made net zero commitments who are now realizing that, they need access to a market in order to do that.